heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Kamala Harris and Donald Trump squaring off in their first presidential debate. We talk the tech angles.
And the crypto sector nursing declines as betting markets reveal new momentum for the vice president. Markets react to the debate.
And Amazon bets big on Britain, looking to expand its cloud business with a $10.4 billion UK investment plan. But first, as markets sink, let's get straight to the first US presidential debate that saw former President Trump and Vice President Kamala Harris trading blows on the handling of America's semiconductor industry and the future of AI.
Well, let's be clear that the Trump administration resulted in a trade deficit, one of the highest we've ever seen in the history of America. He invited trade wars. You want to talk about his deal with China? What he ended up doing is, under Donald Trump's presidency, he ended up selling American chips to China to help them improve and modernize their military.
First of all, they bought their chips from Taiwan. We hardly make chips anymore because of philosophies like they have and policies like they have. I don't say her because she has no policy. Everything that she believed 3 years ago and 4 years ago is out the window. She's going to my philosophy now. In fact, I was going to send her a MAGA hat.
Bloomberg's David Gura is in Philadelphia. You were there for the live action, David. We focused on the tech angles, but what did you draw from the debate?
Well, I'll go back to what you just played there. I mean, I think that was a more robust exchange on policy than we saw on many of the topics that were covered during the course of that debate. So there were questions about former President Trump's tariffs policy. And of course, he's doubled down, saying that he's going to impose more blanket tariffs, not just on China, but on Mexico as well, other countries. So I thought that that was kind of an illuminating moment, and something that Vice President Harris then spoke about afterward were the investments that the Biden administration has made in trying to boost semiconductor production here in the United States during this administration, and also noting the fact that when you look at tariffs and tariffs that have been levied on China when it comes to semiconductors, in fact, it has been the Biden-Harris administration that has elevated them even more. So, look, this was more than 90 minutes long. It went longer than we thought it would go. There's a little policy at the beginning, but we saw diversions from that pretty quickly. And I think, to the degree to which economics was discussed, trade was one moment again where I thought there was at least some robust, spirited back and forth between these two candidates, getting to some substance on that issue, guys.
Harris kept in line with the administration's policy that everything to do with chips from a restriction standpoint is in the interest of national security. And then Trump went after the track record, right? What they did or didn't do over the last 4 years. It's hard to see where in aggregate we've landed, David. Look at social media and the reporting on the Bloomberg terminal. What is the net result of that debate last night?
Well, I go back to what I heard from Governor Gavin Newsom of California before this debate. I said, how pivotal is it? How important is it? What difference could this make? And he said, think of it like World War I, where it's going to be something determined by inches, not anything more than that. This is such an incredibly close race between these two candidates. It would be folly to think that a good performance in that debate would have a sizable impact in raising a candidate's stature in the polls. Conversely, if there were a bad performance, that would have a negative effect, dramatically negative effect on those polls as well. I think you're right. I mean, you look ahead here, we've got fewer than 60 days until this election. Both of these candidates, I think, rightly recognize this is going to be a very hard-fought campaign, and one that's going to be decided fundamentally by just a few thousand voters. I mean, it's rather extraordinary to say when you look at the whole population of this country and the voting electorate. We talk about swing states. It's more granular than that, of course. You all know that as well. We're talking about districts in particular. So I think what we're going to see is an effort to capitalize on whatever momentum these candidates got last night, carry that onto the campaign trail. Vice President Harris going down to North Carolina tomorrow, then back up to Pennsylvania, those two swing states over the course of this week. Donald Trump making the pilgrimage out to California for a press conference at the end of the week, going to Nevada and Arizona as well. So they're going to be back on the trail here, trying to talk their book, trying to do all they can to woo those undecided voters. Again, a very small sliver of the U.S. electorate.
And of those voters, Taylor Swift now coming out endorsing Kamala Harris, which we'll get to in more detail later in the program. David Gura on the ground, thank you very much. Let's continue with the market's reaction to last night's debate. Bloomberg's Abigail Doolittle with us, and I think this is cross-asset. What are you seeing?
It is certainly cross-asset, and it's interesting right now. Stocks down broadly, the S&P 500 and the Nasdaq down more than 1%. I think that has less to do with the debate and has more to do with other factors of uncertainty relative to the reaction to the debate. I would say right now DJT is one of the better signals in terms of what investors saw, with the stock down about 15%, the worst day since April. So I would say this is clearly a vote away from the Trump trade, if you will, and one way that the markets are backing VP Kamala Harris. In fact, if we take a look at the betting odds, just yesterday, both candidates had been at 52% apiece. This after former President Donald Trump, right when Kamala Harris got into the race, led her by, let's call it 20%. She then led Donald Trump by about 12 to 15%. But again, yesterday, going into that debate, 52% apiece. Now the spread 5 to 7% apart in favor of VP Harris. So this is another way markets are telling you that they thought that Kamala Harris's performance was at least stronger, and or they think that she will in fact be elected in November. In fact, if we dig in just a little bit deeper and we take a look at what could be a Harris trade, which would be green energy, it would be health care that goes toward Medicare, Medicaid, along with the home builders. It's interesting. That's one area that is actually not favoring her right now. One of her policies, to the best that we know, is a $25,000 tax credit, down payment for first-time home builders. Some of the home builders that are geared toward those early home builders or home buyers, they are down today, but those other areas are higher. And then finally, if we round it out with a look at crypto, clearly Donald Trump is in favor of crypto. Actually, this is the VIX, so we do have the VIX signaling overall, Caroline, the idea of risk off rising. And that's what crypto would signal too. It's down about 3% on the day. If you look at crypto as another way of looking at it as a tell on, risk off, it's being down confirms the VIX, and stocks down confirms the VIX higher and stocks down. That investors are a little bit uncertain, but overall the debate right now signals that investors are a little bit more favorable, I would argue, toward VP Harris, and that uncertainty into November, well, it's rising.
Abigail Doolittle, with a wrap-up, we thank you. There's also, of course, the macro picture at play, with inflation print today and a risk-off tone. Let's dig in with Sarah Malik, Head of Equities and Fixed Income at Chief Investment Officer over at Nuveen. Sarah, great to have you in the studio.
Yeah, thanks for having me.
I mean, when one factors in political concerns or at least uncertainty, and then you have the uncertainty of what inflation is doing, what the Fed's going to do, how do you measure up those risks?
I think, there's three factors driving the markets right now. First is seasonality. Second, of course, is the election, and then the economy. So second half of September for the past 4 years in a row on average tends to be the worst period for the markets for the year. So we're just approaching that, and look where we already are. The election, I think, creating some uncertainty, mostly around expiration of tax cuts. And what will that mean in terms of inflation? Could cost up to $4.6 trillion to renew those for whichever candidate wins the election. But I think the real main event is the economy. Inflation coming out today, higher than expected with CPI, driven by shelter. People are worried that the economy is slowing and inflation isn't slowing fast enough. It holds the Fed back. I think we get 25 basis points this month for a cut. And then we may have a slow start to Fed cuts if inflation remains sticky. And that is concerning because economic data is slowly moving to the downside.
What does that mean, therefore, around one's portfolio? Diversification key, but people have been putting so much money into 7 key names when it comes to technology. Does tech continue to outperform?
I think tech will outperform as rate cuts accelerate. We can break down tech into 3 buckets: semiconductors, software, and mega caps. So software has been the laggard year to date. That's where we're most interested. We think there's some attractive names there. It's under-owned by portfolio managers. Market-leading companies like Microsoft and Salesforce. Salesforce in particular looks kind of cheap on a valuation basis. People could, as rate cuts happen, could start spending more on their products. Semiconductors, probably a little more downside to go. In a typical downturn, that segment goes down 30 to 40%. We are not there yet. So I think semis, as we approach 2025, we could see an inflection point as 2025 could be when people start a replacement cycle post-COVID. And then mega cap, you need to be selective. We have Meta and NVIDIA dominating returns this year. I think people are waiting to see monetization of artificial intelligence for some of those companies, return on investment. So mega cap, you need to be selective. A company we like is Apple, where it's a low capex play for them to get AI into their phones. That iPhone replacement cycle is slowly starting this year. We'll pick up next year as more AI is into those phones. I think Apple is the attractive play in mega cap.
Sarah, do those themes you've outlined continue through the second half of the year into next year, irrespective of the outcome of the election? I'm particularly thinking about the mega caps and your commentary on the chip sector.
I think, well, first of all, on a macro basis, inflation and the economy will continue to be themes throughout this year. I think for semiconductors, the biggest reason for them to inflect will be a replacement cycle for the stocks. Whether we're manufacturing and global supply chains and onshoring versus offshoring could be somewhat of a bigger issue depending on which candidate wins. Software, I think, is more of a rate play, and as companies start to spend more on software and the stocks evaluation. So I think mostly it's the fundamentals that stay intact, and which candidate wins the election doesn't have a huge impact on them, but it could have somewhat, because we also have to worry about regulations and the degree of regulations on some of these mega cap companies.
Sarah, I sat on my sofa like everyone around the country hoping that AI would come up in the debate. The question for markets is, how much longer does this trend have to run? Listen to what Mike Wilson said on Bloomberg Television earlier today.
We just got overcooked on the whole AI theme. Doesn't mean it's over. We've written about this extensively. Like, we're not believers that this is going to change productivity materially in the short term. That's a long-term story.
And that's why I asked you about the election. Does it happen irrespective of the outcome? Do you agree that this AI trade's overcooked right now?
Well, it definitely became overcrowded from an investment point of view. And with any new structural change in the technology landscape, like artificial intelligence, which I think is here to stay, there's going to be fits and starts. And what people have been worrying about since the July 10th peak is where are the signs of monetization and what is the return on investment on this tens of billions of AI investments that technology companies have made and that companies are making in order to improve their revenue growth and improve their efficiencies and productivity. That's what we're not seeing yet. So I think we are in a bit of a plateau or a pause for these stocks until we start to see more clear signs of what it really means and the impact on businesses. Not surprisingly, consumer technology companies are seeing positive impacts from AI, like Meta with its targeting ads on Instagram, and also Amazon, which is targeting what people more efficiently should be buying. But in other areas like manufacturing companies, we're not seeing the yield increases yet. And I think that's the other non-tech areas of the economies where we want to see that impact of artificial intelligence.
Sarah Malik, so good to have you here from Nuveen. We appreciate it. Coming up, Sarah mentions Amazon. We're going to dig in as it continues to expand its cloud business in the United Kingdom. More details next. This is Bloomberg Technology.
Amazon says it would spend $10.5 billion in the UK to grow its cloud business, adding to a string of recent expansion moves in Europe and giving Britain's new Labour government a welcome investment boost. Bloomberg's Matt Day, who covers Amazon, joins us now from Seattle. And Matt, you and I have covered many of these deals, right? I think about Virginia, where AWS in particular pledges, I think it's $35 billion through 2040. But it's still a significant bet on Amazon's footprint in the United Kingdom.
Yeah, it is, and it's about in line with what they should be spending there. You look at the UK chunk of sales for Amazon. This probably makes sense within the context of Amazon's capex because they are spending just a ton on data centers, as you mentioned. This year alone, we've had announcements: Saudi Arabia, Mexico, in Europe, in Germany, and in Spain, and now United Kingdom. Just kind of a full force of AWS saying that they're going to stay relevant in the cloud market by expanding more than anybody else.
Yeah, give us context to the race here, the need for compute to satisfy demand.
So it's at least two separate things. One is sort of the ongoing move to the cloud. Companies unplugging their data centers in favor of rented computing power. That's Amazon, that's Microsoft, that's Google. You've also had this AI cocktail thrown in there where folks have just had to ramp up their budgets to afford these pricey chips, to afford the cooling that makes them happen. And then just on top of that, power is scarce just about everywhere you look. So there's a real kind of land grab on of big cloud companies to build new campuses, to expand kind of as quick as they can to meet this new emerging demand.
Matt, Caroline and I will spare you from the UK political component of this story, although the Chancellor of the Exchequer, Rachel Reeves, wasting no time to kind of point out this is a big win for UK PLC. The business is interesting. Every time we talk about Amazon or AWS's footprint in Europe on this program, I note that quite a lot of Amazon staff will engage on LinkedIn. There's a lot of them there. But how does it compare to their presence in North America and elsewhere?
Well, their biggest hubs are in North America, right? That's where the majority of their data center investment over time has been, but they are going more international, and they are going into sort of smaller and smaller markets. If you roll back the clock many years, it used to be they invested in kind of big centralized data center locations. I believe that was outside of Paris in the EU, and then slowly over time they've kind of gone down and said, listen, not only do we need points of presence in local markets, but we need to spend, billions of dollars in local markets to take advantage of the opportunities there to be close to just the big corporates who are demanding cloud computing.
What about taking advantage of benefits that certain governments offer? Is that part of the game?
It is. I think Amazon, certainly wants any incentives that are on offer wherever they go. But I'm not sure it's necessarily the driving force. If you listen to Amazon's critics, they will say, listen, if you map their data centers, it just maps out to where their customers are, right? So certainly policy would play a role. I'm just not sure the market thinks it's a very big one.
Matt Day, great to have the expertise. Thank you. Coming up, we'll be joined by Corti CEO Andreas Cleve to discuss how, guess what, artificial intelligence, well, it's transforming the healthcare sector. That's next. This is Bloomberg Technology. On today's AI in Action, we are taking a look at Corti. It's a global AI engine designed for healthcare, with AI that not only takes practitioner notes, but it helps with quality assurance, with journals, with prompts, and helps document every patient interaction. Now, the company just announced the hire of former Microsoft and Philips executives to help lead the company's expansion here in the United States. Corti CEO Andreas Cleve joins us now. Why is the US such a focus?
It's the most important healthcare market in the world. It's where I myself live, and I'm a patient. And it's a place we feel very excited to work in, as some of the best providers and payers are there. And I think they'll be the cornerstone of building the most important solutions for healthcare.
What do you offer those practitioners, those experts? Because we're all trying to find out what the return on AI investment is. What do you offer healthcare practitioners?
Actual time back. And that's a promise that's been promised a lot of times. And having been here for a while, so we were founded as a research company back in 2016 to prove we could research and find ways of delivering safe and trustworthy AI. And that's exactly what we give today to providers. We have a solution you can build into whatever tool or application you use. And here our real-time AI actually helps deliver on some of these promises by doing medical coding. We do summaries, we do documentation, and in the end, help them carve back some of that time lost to administration.
Andreas, a startup founded in 2016 is a little bit refreshing, actually. There have been many new companies formed in the last 2 years in this area. So in that time, you built up data, 100 million customer interactions. What's the benefit that the health system gets from those interactions now?
Yeah, I am excited as an entrepreneur to see so much AI being adopted. But I am still astounded by the amount of AI that's being deployed in healthcare today that isn't built for healthcare. So we see a lot of models today who are as good as doing haiku or finding a great kitchen recipe as they are at doing healthcare AI. And what we're offering is obviously an AI that's solely built for healthcare. We have been here for a while, researching on this, publishing on this, and partnering with some of the best providers to build an AI that is only tuned to one thing, and that is listen to healthcare providers and payers and actually deliver automations and augmentations that really work.
The difficulty in this country is insurance and established healthcare systems. Have you been able to navigate that?
I think the way we think about it a lot is to ensure that we don't just come with yet another application. So what we want to come with is a technology that you build into whatever you use already today, and that can be used both by payers and providers. So today we're lucky that more than 100,000 patient interactions are flowing through Corti across all 50 states in the US. And ultimately, I just heard this from a doctor the other day, it actually helps them ensure that they're more on point, also in handing over patients, data, or documentation between, let's say, a payer and provider.
Let's exactly talk about patient data. There's a lot of anxiety about it running through various people's hands, Andreas. How are you ensuring the security?
So we are originally a company from Denmark in the cold north in Scandinavia in Europe. So in our DNA is compliance. We are from the most regulated part of the global healthcare system and also known to be one of the best healthcare systems. And we have been lucky enough to be partnering with the European Union and their legislative arm when they wrote the AI Act. And we've been lucky enough to work with them on GDPR. So into the engine of Corti and all the technology we've built, compliance and data safety is among them. And that means that we are not taking data, we are not appropriating data, we're not misusing data, as we come from a market that's driven by patients, and those patients, they give each other healthcare for free. And we really have an ethos of ensuring that patients come first. That's, I think, very core to what we believe in.
Andreas, the most recent piece of news for you is all of the sort of top talent you've been hiring from both tech and healthcare. How difficult and how expensive was that?
Yeah, it's definitely been a big challenge. I think there's a lot of hype around AI startups, but I think we've been lucky to see some of the best talents in healthcare meeting customers, providers, payers all the time who really want to get on this AI journey, but they've maybe not yet found a provider that actually was trustworthy. So we've been lucky enough to show them that, and luckily we keep hearing that from patients and providers who start using it, that they actually see the outcomes they want. And I think that entices a lot of the sort of the titans of our industry to come and see if it's real. And luckily, when they see it, they actually want to join.
Corti CEO Andreas Cleve, great to have you on the program. Thank you very much. Let's get to some other news in talking tech. And first up, India Prime Minister Narendra Modi aims to bolster its electronics sector, targeting $500 billion by the end of the decade. This as India tries to woo more chip makers into the country, already approving $15 billion worth of semiconductor investments so far. Plus, London-based fintech firm Revolut topped its rivals in complaints related to authorized push payment scams, where criminals trick people into sending money to an account outside their control. A UK regulator has come up with a potential plan that would require firms to reimburse fraud victims within 5 days, putting pressure on financial institutions to improve scam concerns. And Laser Tech remains hopeful of sustained growth. The Japanese firm sees double-digit annual revenue growth for the next few years, driven by AI demand. Laser Tech holds 100% market share in machines that verify chip designs. Its tools are used by chip makers like TSMC, Intel, and Samsung. Now, coming up, really important conversation. Waymo making some progress in the world of autonomous ride-hailing. We do speak with the CEO, Tekedra Mawakana, coming up next. Stay tuned. From New York City and San Francisco, this is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on these markets that have been under pressure post the CPI print, of course. Ed, look, we've got a bit of risk aversion creeping into the markets. We're off of our lows, but still the Nasdaq 100 is dragged on by about 0.9%. We seem to see a slight move to the havens that is the bond market. Yields currently flat. We had seen more of a bid a little bit earlier in trading. Look, but the overall question is, can the Fed be cutting to the whacking proportion of a 50 basis point as soon as September? Most now dialing that back to a 25 basis point expectation. Therefore, maybe just wind coming out of some of these more risk-on trades. I talk of that within the spectrum of Bitcoin, we're off by more than 2%. But of course, maybe that's a political reflection of the debate of yesterday when, you know, former President Trump is deemed a more crypto-pro candidate. And perhaps maybe the market feeling his performance was lackluster versus that of VP Harris. Let's move on and have a look at what the individual movers are looking like in terms of technology. Look, the bid up in certain solar names, more than 9% higher for First Solar. That, again, being deemed perhaps a fallout of what was a strong performance by VP Harris yesterday. I'm also looking at what's happening with ARM holding, once again rising some 3%. This is more back to its V9 chip design. Maybe that's being integrated into the new Apple chip. And look, really, Morgan Stanley once again singling this name out as one of its best forward focuses for sort of edge AI, as they're calling it. And Tesla, look, biggest points drag on the NASDAQ, wanted to call it out, more than 2.5% lower, Ed. What are you looking at?
Waymo, the autonomous driving arm of Google parent Alphabet, has been making some progress of late. Autonomous ride-hailing has hit more than 100,000 weekly paid rides across Waymo's first markets. And the company's also published new data showing it's done 22 million rider-only miles to date with no one in the driver's seat. Joining us to discuss, Waymo co-CEO Tekedra Mawakana, who last week was also named in Time's 100 most influential in AI list for 2024. Good morning to you, Tekedra. When we said you were coming on the show, lots of people had very sort of granular questions about the paid rides. So let's start there. You know, what is the average distance taken, the average fare per ride, and a bit more about the economics of what you've achieved?
Yeah, thank you so much, Ed, for having me. And I would love to hear more about your experience, because I've been watching your social engagement like so many of our riders. So you said it, you know, we've reached over 100,000 rides per week across San Francisco, Phoenix, and Los Angeles. The distances that people travel and how they're using the service vary wildly between those locations. In San Francisco, we're finding that like 36% of people are actually using the service to connect with transit, you know, which is really surprising for us. So that's like, depending on where they are in the city, it could be like about a 3-mile ride to get to a transit or to get to work. Other people are using it to run errands and to doctor's appointments. So it really depends. And when you talk about the economics, you know, we're a premium service. And so people are, you know, paying for the consistency and the safety of the Waymo driver in the Waymo One service.
Under the sort of co-CEO model, you're really focused on the commercialization of what Waymo's been doing for quite a long time. And just going back to what you just said, yeah, I use Waymo often. I also use Tesla's FSD supervised and was using Cruise. And, you know, the experience is interesting, but I'm trying to think about how I would use it in the course of my normal life. And for me, SFO is a big thing. So when am I going to be able to go down to SFO in a Waymo from here on Pier 3 Embarcadero? And what's the progress you're making there?
Yeah, so, you know, when we launched in Phoenix, one of the early engagements was with the Phoenix Sky Harbor Airport. And so now we offer 24/7 pickup at the curbside there. You know, it's a process. We were the first autonomous vehicle company to receive FAA approval to be able to do that kind of pickup. And so we're deeply engaged with SFO officials so that we can do exactly that kind of pickup. The other thing that we're also deeply engaged in with our employees right now is fully autonomous rides on freeways, because, you know, people want to take trips to and from the airport and they want to do it on freeways. And so we have that going in Phoenix. We have it also in San Francisco with our employees right now. And both of those are really critical unlocks for us. And we're really focused on it right now. And, you know, doing everything with safety at the center of how we move. It's iterative, it's deliberate, and it takes what it takes to get it right.
Let's dwell on that safety, Tekedra, and thank you for joining us today. Because S&P actually, kudos to you, calling out Waymo as the front runner in the field of AVs in the United States. But they do say challenges remain, including an ongoing investigation from the National Highway Traffic Safety Administration. How are you discussing that? How are you looking at your safety data?
So we're really, really proud. I mean, we, you know, founded in 2009 as the Google Self-Driving Car Project. Our company culture is built around safety, and it's built around the transparency of our safety. You know, there's not one measure of safety. So we've built a lot of measures and a lot of transparency. And last week, we launched the Safety Hub. And we're the only company that's sort of putting all of our data out there for academics, the media, everyone to engage with it and understand why it is that we know that we are, through the data, improving road safety. You just had some of the stats up, right? Like reducing the number of airbag deployments, injury-causing crashes. I mean, this is why we exist, right? Level 4 technology should make the road safer for humans, for pedestrians, for cyclists, vulnerable road users. And we're showing that that's the case. But we're still, with the NHTSA investigation, engaging, demonstrating that, you know, engaging at every level of government is what you have to do when you're the first to do this. No one's reached this level of scale. And so we understand NHTSA has a role to play, and we also have a role to play in being very transparent.
And for that, you need money. And luckily, you got a large amount of it, $5 billion coming from Alphabet. Just tell us about the investment needs, the focus of that. S&P, again, calling out the need for this sort of capital investment to drive the US forward.
Yeah, so super fortunate to be backed by Alphabet as well as our other external investors. You know, we're laser focused on scaling this technology. And so that investment, while it's a big number, doesn't represent a significant growth in our overall trajectory because we've been very diligent about bringing down our cost structure over time. And so you saw us in the last couple of weeks introduce our 6th generation driver. When you see us introducing a new technology or a new approach to our go-to-market strategy, one of the things that you can think about is that's going to make scaling our business more efficient over time. And so that's what we're really focused on doing, and having the backing of Alphabet is a great, great place to be.
Tekedra, what's your relationship like with Ruth Porat? I had my sort of final quarterly earnings call with her at the last call, and she's focused on other things now. How will you work together as she kind of transitions to a different function at Alphabet?
Yeah, so Ruth is going to remain involved, right? She's taking on this role as president and chief investment officer, and we are obviously a really important investment for Alphabet. And so she's been involved since I joined the company. She's a very, very ardent supporter of Waymo, and I look forward to continuing to work with her in this new capacity.
Tekedra, as you know, I kind of have a hands-on experience of your competitive landscape. What do you make of sort of Tesla's strategy with robotaxi and a proprietary ride-hailing app? And also, why sort of is your approach different and going to succeed to them or to a Cruise, for example?
You know, this sort of question of competitive landscape, I think, is so interesting because we're in the business of trying to make the road safer. And we're in the business of doing it in a way that takes the human out of the loop for 2 reasons. One is it expands the number of people who have access to mobility options, right? If you don't need a driver's license, if you don't have to sit behind the wheel, then Waymo's a perfect opportunity for you. And hopefully any level 4 system that actually makes, you know, the roads safer will be that. And so that's the way we think about it. And so when I think about some of the other approaches that people are taking, I think if you need a driver's license or if the human has to take over, it's just very different. And it's not, you know, we're heads down, focused on our strategy, which is a level 4 technology.
Thank you for talking us through the strategy today. Waymo co-CEO Tekedra Mawakana, we appreciate your time. Now coming up, we'll be joined by Liz Yang, head of growth at Azuki, for her take on the presidential debate's impact on crypto markets. Well, they're signaling. This is Bloomberg Technology. It's gone viral. Taylor Swift has endorsed Kamala Harris. She made the announcement just minutes after the debate of yesterday wrapped through a social media post, as you can see, featuring her cat, as she calls herself a childless cat lady. We understand the reference there. She says she is voting for Harris because, quote, she fights for the rights and causes I believe need a warrior to champion them. Bloomberg opinion, David Lee, is with us now. Dave, it feels, though, that underlying all of this is artificial intelligence, and you point that out in your piece.
Yes, I mean, this was the thing that Taylor Swift says kind of motivate her to speak out and publicly endorse the Harris campaign. I mean, she may have done it anyway, but she made a specific point of bringing this up in her post. She said there had been misinformation posted about her by Trump on Truth Social, suggesting that she had been that she was endorsing him and that some of her fans were supporting him as well. And so what I think this kind of represents is, you know, the first kind of major impact we've seen from the use of AI in an election. Now, we've heard researchers warn that deep fakes and other kind of misinformation using AI would perhaps influence voters. And this is kind of what's happened, although it's come from a rebuttal rather than the original content itself. And Taylor Swift's response is going to be seen by many more people than the original post by Trump.
As you point out in your opinion column, we can only speculate if Swift would have endorsed Harris had that fake endorsement not happened. But then there's like the Taylor Swift effect, right? And, you try and make sense of a presidential debate. What's your conclusion in the column about the impact Taylor Swift coming out and endorsing Kamala Harris will have on this election race? Opinion tech columnist Dave Lee, go.
Well, I think one of the things we've seen in the past when Taylor Swift has brought herself into politics, which we know she does very, very carefully and with a great deal of thought, is that what we typically see is voter registrations among young people, among young women in particular, tends to go up quite considerably. So I imagine we'd see that happen again here. There's questions of how much of that translates to people actually going to the polls, but put it this way, Taylor Swift's endorsement is certainly one you'd prefer to have than not have, right? So particularly when it's done in a way that is drawing attention to one of the major criticisms of Trump, which is that he, makes things up and puts them on his website.
Bloomberg opinions, Dave Lee, appreciate it. Go check out his column. Meanwhile, let's get to where other youthful voters have been looking, crypto. And more importantly, let's look at Bitcoin, because it is actually under some pressure today after the last 2 trading days off by 0.25%. Call that CPI, but maybe also call it a reaction to the US presidential debate. Let's discuss with Liz Yang, she's head of growth at Chura Labs. And Liz, I'm really interested more broadly in how crypto is being used as a gauge for the former President Trump's performance or chances of being re-elected?
There are several different ways. So firstly, if you look at the price of Bitcoin, you can consider that as a proxy for how the crypto sector views Trump's chances of being elected in the upcoming presidential election. This is because Trump has come out as a staunchly pro-crypto candidate, forcing the Democrats' hand on the issue of crypto policy. Now, if you look at prediction markets like Polymarket, what's really, really fascinating is that almost in real time, viewers were able to track crypto sector sentiment around the timestamps of when each candidate came out with their respective arguments.
Liz, I was doing something similar last night because we'd reported on it. We said, OK, if you want to follow some sort of real-time sentiment, look at specific crypto assets that trade 24/7. What I couldn't work out was, is this just a clear situation where Trump is the crypto candidate and Harris is not, or there's just not a thorough understanding of policy for either candidate?
It's a really good question. So overall, when you take a look at markets like prediction markets, information is, of course, imperfect, but I think that's a reflection of the American populace at large in terms of how they vote. What I think is very powerful about tools like Polymarket, other prediction markets, as well as political meme coins or politified coins, is that they're a way to be able to gauge the barometer in terms of sentiment. And I think that if you take a look at previous elections, there's been enormous appetite in terms of using statistics to track where sentiment's at. So, for example, 538. And I see Polymarket and politified meme coins as a natural extension of this behavior.
Let's just talk about how the Trump campaign more broadly has embraced crypto. Non-fungible tokens, key, but also this Liberty Financial, World Liberty Financial. It seems to be a DeFi potential protocol. Doesn't seem to be live yet, but being talked around, particularly by his sons. What do you make of that particular project?
I think Trump is trying to put his, money where his mouth is, and he's trying to enter into these various different forays to show his, dedication and interest in the crypto space.
Where do we go from here? I mean, there comes a point where the markets can continue doing what they're doing, be they prediction or a specific asset you track, or people look elsewhere. What's your kind of hunch in that respect?
So when it comes to tools like prediction markets and meme coins, I see this as a natural extension of behavior that actually started during the pandemic with Wall Street bets. And what happened during then is that because of the pandemic, people were starved for social contact with their friends and family, and they were able to form these bonds with other traders on such forums. So what it means is that for a lot of younger people, investing is not necessarily just about ROI. It's also about internet culture and memes and also entertainment as well as community. And where I see political meme coins coming out of this or politified tokens is that it really is a natural successor of this kind of trend. So with politified meme coins, it combines financial nihilism, with political satire, with internet-grown culture, as well as entertainment. So really transforming how the younger generations not only looking at investing, but participating in the political process.
Liz Yang, Head of Growth at Azuki and Kira Labs. Really appreciate it. Thank you very much. Now, coming up, Sony bets big on its loyal audience to pay a premium for its new PlayStation 5 Pro. Is that going to work? We'll discuss next. Kara, what are you looking at?
Oh, I'm talking gaming. I'm talking memes. I'm talking GameStop. We're off by almost 15%. Sales miss. We're getting fundamentals for this business. They're down at one point as much as 18%, but really second quarter sales that came in below consensus estimates. The company also filed to sell up to an extra 20 million shares. This is Bloomberg Technology. Sony's PlayStation 5. It's got a refresh, and the company is debuting a new PS5 Pro, but it comes with a premium price tag. Bloomberg's Jason Schreier joins us for more. Whew, it's caught people by surprise.
$700 for the PlayStation 5 Pro. There was a meme way back in the day when the PlayStation 3 was announced because they came up on stage and said that'll be $599 US. That was a whole meme, and now it's $100 more. So I guess the memes have to keep up with inflation too.
I was taken aback, Jason, because as you know, like I'm a loyal, avid PlayStation user. It's my console of choice. But when you think about the console market as a whole, this is like PlayStation raising prices when the market's kind of going the other direction, right? Like kids today, apologies for the expression, but they're doing something different with gaming.
Yeah, it's funny. I think that if I can offer a few words in PlayStation's defense here, or at least trying to understand where they're coming from. So the PS5 Pro, this is not a new console. This is a model of the PlayStation 5 that will essentially play the same games at more vivid graphics, higher refresh rates, and better resolutions. Essentially, this thing is meant for tech aficionados, the same types of people who maybe bought an Apple Vision Pro or are getting a new phone every single year. So this is not meant for kids or the mass market. This is a model that is meant for people who have money to spend, who don't really care about price quite as much and just want the highest end gear. In fact, I saw a good stat here. This is from Matt Piscatella, an analyst for Circana, and he said that the PS4 Pro, which was a refresh of the PlayStation 4, the last generation console, accounted for 13% of total lifetime PS4 units. So not a significant amount. And I expect this will play a similar role in the market.
Talk to me about a lack of disk drive, Jason.
Yeah, man, I had a conversation not too long ago at a party in LA where I was talking to an executive for one of these big console companies, and I was like, it's funny, the market is moving to digital pretty quickly. And he was like, no, Jason, it's already there. A very large percent of customers are buying their games digitally these days, or not even bothering with discs. You guys are about to talk about GameStop. That is why they've been on the downswing for a long time. And so I think Sony sees the disk drive as an accessory, and it is. You can buy one as an add-on. They see it as not necessary for the large majority of people. And in fact, I would say that the next generation of consoles, it's very likely that they will not come with disk drives, and that disk drives will be add-ons for those as well.
I have so much nostalgia for a disc. Jason, super quick, the details of pre-ordering and when PS5 Pro actually comes out.
Yes, it comes out, I believe, November 6th, and it is $700. And pre-orders they're going to make available, I believe, in the next couple of weeks. I believe in 2 weeks or so.
Some of those FX price point differences from the UK and EU as well, one to watch. Bloomberg's Jason Schreier, a joy to have you. Thank you. And that does it for this edition of Bloomberg Technology. Ed, don't dwell on your nostalgia for discs.
I know. but I will play some PlayStation today. Now, don't forget, recap the show on the podcast. You know where to find it on the Bloomberg terminal, as well as online on Apple, Spotify, and iHeart. Huge thanks to everyone out in New York City, the team here in San Francisco. This is Bloomberg Technology.